Oil price forecast: could Brent reach $200 as supply risks grow? Brent crude oil could extend toward $150 if supply disruptions persist and demand strengthens. WTI remains bullish, and a major breakout could open the way to much higher levels. The $200 oil scenario remains an extreme outcome that would require a prolonged and severe global supply shortage. Brent crude oil continues to rally in a straight line after marking a low at $70 as the Strait of Hormuz disruption keeps the global supply risk elevated. In my view, Brent could move toward $150 if Chinese imports recover while Middle East supply remains constrained. But a prolonged shortage could eventually bring the $200 scenario into focus. The article examines the supply shock, inflation risks and the key Brent and WTI levels that would confirm a much larger oil rally. Strait of Hormuz disruption tightens the global oil market. The escalation of geopolitical crises in the Middle East raises supply concerns in the oil market. U.S. strikes have failed to reopen the shipping route and effectively put an end to tanker traffic through the strait. The tension is also spreading in the Red Sea, where a second blockade could disrupt the second major shipping route. Brent crude oil has already jumped back over $90 per barrel. U.S. Strategic Petroleum Reserve crude inventories are currently around 100 million barrels lower than at the beginning of the conflict as seen in the chart below. China resumes the imports of 10 to 12 million, the competition for available barrels would increase sharply. The market would then need more supply or weaker demand elsewhere to restore this balance. A large adjustment through demand destruction would likely require a serious slowdown in global economic activity. I think this is the key reason the next move in oil prices may be much stronger this time and push the prices to new records. Rising fuel prices and inflation increase the risk of $200 oil. This pressure is already making its way into the refined products. U.S. gasoline prices are again rising above $3.40 per gallon and refining margins are skyrocketing. Continued restrictions in the Strait of Hormuz may take Brent above $100 per barrel. If the Chinese crude imports have a strong recovery, the market may be further tightened and this may push Brent to $150. If the disruption in the Middle East is prolonged and Asian demand continues, it may trigger a strong surge in oil prices to $200. This is where the $200 argument takes on more reality. Oil price shocks have triggered fast and nonlinear price moves. If the shipping disruption continues through the Strait of Hormuz, it could bring about that kind of scenario. If the price of WTI breaks $106 and then $140 and physical supply remains tight, the market could begin to price levels that previously looked unrealistic. WTI crude oil tests a major long-term resistance. The long-term outlook for WTI crude oil also shows constructive price action within the descending channel pattern. This descending channel pattern emerges from the July 2008 high at $147.27. Each time the price hits the resistance of this channel, it produces a strong correction. The same correction started from the March 2022 high of $129.42, which pushed oil prices back toward the midline of this channel at the $55 area. But the spike after the US-Iran war pushed the price to $119.48, but the price failed to close above $106 in May and triggered another strong drop. The WTI crude oil market must close above $106 on a monthly basis to trigger a strong surge toward $150. Brent crude oil eyes $150 as supply risks grow. The long-term outlook for Brent crude oil remains strongly bullish, as the price formed a bottom in December 2025 at $58.98. After forming this bottom, the price initiated a strong surge to mark a high in April 2026 at $120.54. This indicates that prices are likely to recover the June decline and are poised to return to $120. This time, the drop from $120 to $72 is followed by a strong recovery back toward $120. This indicates significant volatility in the Brent crude oil market. It will likely increase the possibility of a breakout above the $127 area. A break above the $127 area will open the door for a strong surge toward the $200 region. This surge from the December 2025 lows is defined by a constructive bullish trend. After marking this low, the price rallied to mark a high in March 2022 at $135.36. Then, prices again initiated a correction. This correction was triggered when RSI confirmed the overbought conditions. Now the RSI is rebounding from the mid-level, which indicates that the price is ready to break new record levels. Brent may not move directly to $200. The price needs to break above $100 and then $127. A confirmed break above $127 could then open the door to $150. If the supply disruptions worsen and demand remains strong, then the rally could eventually extend to $180 to $200. On the other hand, a break below $70 is unlikely and may weaken the bullish structure. WTI crude oil breakout could open the way to $150. WTI oil has recovered from the $55 to $60 level and is now testing $90. The price has returned to the premium zone of $80 to $106. The first major resistance of this premium zone is $106. A break above this level would indicate a breakout from the long-term consolidation pattern. A break of $106 would also push the price into the expensive zone. This zone lies in between the $106 and $140. The high limit near $140 is significant due to its proximity to the peak oil price in 2008. If oil prices continue to rally to this area, this will indicate strong volatility, but a sustained move above $140 may put WTI oil into an extreme stress zone, where historical resistance becomes much weaker.